We'll start with Chipotle, whose shares are higher into the print and up more than 50% off their recent lows. We're eyeing foot traffic, especially after introducing some new menu items and reward initiatives in Q1. Full-year margin expectations are near 26%. And don't forget, Chipotle posted a rare miss last quarter, setting shares lower by about 6% on the news. CNBC contributor Gina Sanchez is here with our trades today. She is Lido Advisors chief market strategist and a CNBC contributor. Gina, good to see you. Chipotle, I don't know, can they keep going? Almost $1,800 a share right now.
You know, this is a tough one because it is so highly priced. It is 40 times forward earnings. But if you look at the restaurant industry, you know, traffic, same-store sales have been declining January, February, March. You see a very, very steep decline. Chipotle has been holding up. And, you know, Chipotle did not raise their prices as much as their competitors. And so while that really hurt them, and that was part of their miss last quarter, was that they, you know, got slammed by food prices. A lot of those food prices are finally starting to let up. Food pricing is starting to drop, with the exception of beef. Everything else is falling, and that should free up some margin for Chipotle, which is badly needed. But the good thing is that as we go into a recession, this is actually because they kept their price increases more modest relative to their competitors. They could attract more sales while, quite frankly, people are just going to be spending less on fast casual restaurants.
No, in fact, it's impressive at a time when everyone seems to be beating because of these big price hikes that they're choosing a different tack, and you think it would pay off in the long run. Let's pivot and talk about Penske, Gina, because those shares are down ahead of their results, but up 18% this year. Last quarter was strong, but again, we have talk of a trucking recession, worries about rising inventory levels, concern about kind of what's going on in the auto market generally. Do you like the stock here?
So this one's interesting because the forward, this is obviously really cheap stock, 8.8 times forward earnings, and expectations for growth next year. They're still expected to continue to post a loss next year. But, you know, they're coming out of 3 years of a trucking shortage because of, you know, COVID disruptions, and there was a trucker shortage. There just weren't enough truckers. And so they're coming into a slowdown when the whole industry itself was in shortage. And so people are still needing to buy trucks, and they are the leader in this space. Yeah. So, you know, they're definitely priced down for a negative outlook, but they have more upside.
Interesting. Okay, then let's close with probably the biggie of the day, which is obviously PacWest. After what happened at First Republic, PacWest shares are down 8%, kind of in sympathy with that. It's had its own challenges, but yet Western Alliance was able to turn in better than expected results. What's your read here?
You know, the trouble with PacWest is that they are in a group right now that just is unloved. Since the collapse of Silicon Valley Bank, and PacWest felt it along with everybody else, their stock dropped dramatically. And quite frankly, they lost a significant portion of deposits as well, along with many smaller banks who were losing deposits. They were forced to go to borrow at higher rates from the Federal Reserve in order to shore up their capital, and they're seeking a buyer for their commercial real estate and small business lending unit in order to, again, shore up their balance sheet. So, you know, none of these are exactly signs that, you know, help make you think, this is a good one to buy. You know, but I think that this space, you have to be very careful. If they can achieve this sale, they could be set up quite nicely relative to the other banks.
Right, or maybe any sort of parting comment as we watch one of the few days all of a sudden, Gina, where we have some big stock moves, time when the VIX has been under 15. The markets make sense to you here?
You know, I mean, the markets don't know where they're going. You know, I think that that's very, very clear. And I think volatility is where we go from here. You know, we saw the markets destroy everything that had a high multiple and then lean into everything that was growthy. Now it's saying, gosh, maybe there really is going to be a recession. They don't know. We don't know where we're going yet. The pricing still hasn't settled. And I would say that you have to mind your actual, you know, mind the underlying fundamentals of every stock you're buying right now.
Yeah, to your point, the VIX, you know, finally getting kind of a 2-point jump today. We'll have more on that next hour. Gina Sanchez, always a pleasure. Thank you so much.